Hello everyone, I'm Kels with CryptoTrain.io, and this video is going to be one of 75 on how to read indicators. So if you have this book or you're part of our Discord, it'll be number one in the book, and you can follow along with this or just watch the video wherever you want. If you don't have a copy of this, just let us know and we'll get you one if you're a member of our Discord. Okay, so today we're going to go over the RSI. RSI is a relative strength index oscillator, which measures the strength of a movement. There's a lot of misusage in this particular indicator, so you need to pay attention because I'm going to show you three different buy and sell signals with this indicator that is not taught anywhere else, and I will show you how to do it our way, which pretty much works a lot of the time, about 90% of the time. Again, there's no indicator that's going to be perfect. You're gonna have stop losses. That's why money management is always important for any kind of trading, no matter if you're doing this, stocks, options, or whatnot. It will always be important to you. But this indicator that traders use is measures how price movement changes and the speed at which it changes, and it measures the significant movement in the changes that analyzes the price action. It will lead the momentum, since it is a momentum indicator, it will lead most of the time. So that's when we want to catch those movements. We want to catch those movements when the momentum of the RSI changes. And that's why we gotta pay attention to movement, divergences, and key support and resistance levels in the RSI. So here is the chart. Here is the chart right here. Let me get rid of this. Here's the chart right here. You never ever want to trade a single indicator on its own. It's not a good habit. Does it work for some people? Yes, but it's not a good practice to do. So we'll always accompany it by an EMA, and you can see that this is an EMA 15. Since we are going to try to get in and out of trades on the 2-hour chart, this is the one that we want to use, the EMA 15. The RSI is down here at the bottom. This is what it looks like. You have your cloud right here, which will measure the 70 all the way to the 30, and anything above 70 is considered overbought, and anything below 30 is considered oversold. You can't trade those as that way. So if it comes up here and it's overbought, like right here, you can't automatically go short, because this is how you will get wrecked and lose your position. You'll have a lot of stop outs, and that's not the ideal. I'm going to show you how to properly use the quote unquote overbought and quote unquote oversold. So we're going to see that. TradingView has added a moving average that averages the past, however you have it set, in this case, the past 14 of the RSI. It's not useful in this particular video, this tutorial, so we're going to just go ahead and click it off, and we're going to change the color from purple to black so we can see it a little bit better. And now it pops out so we can see it a little bit more. Okay, so the first thing that we need to look for, the first sell signal or the buy signal that we want to take, is when the RSI is in the oversold position, but we do not buy right there. You can see if we bought right there, it went sideways on us for quite a while. This is gambling trading, because who knows if this is going to go down. Like over here, we can see that it kept going downwards and downwards and downwards. When you first bought in, here's where it first came out on there. So this would be your buy signal if you traded that way. You don't want to trade that way because it is dangerous and it's reckless, and it's not how you use the RSI. I will continue to say overbought and oversold because those are the areas that people identify this particular indicator with, but those are bad names for them, because this is just telling you that the momentum is down. We want to catch that momentum when it comes back up. And how you do that is you wait for this RSI to make a lower high, like right here. We made a lower high on the oscillator. Right here, we made a lower high on there, and you can see on there that we have a lower, we have a low, a lower high, and we broke above the 30 level of the RSI. So this tells us that this momentum right here is pretty much done, and that means that we're heading up. This is I like to level them as 1, 2, and 3, as in gambling. 3 being the most gambling, 1 not being so gambling because it's usually 1 to 1. This is a 3 right here. Hindsight tells us that it still made money, but this is a gambling position right here. It did break above it. You will want to take this trade every time, but not a full position. So if your normal position is say $100, you would want to do half that position because this is a 3 out of a 3. So this is it's riskier, but it's not that bad. So here is the entry right here. That's going to be your 1 or your 3 on there. That's your level 3. And this right here is your true entry. And this is why it's so important to use the moving average as your confirmation. And that is a level 1. That is a level 1 right there. So here is your little bit riskier. You do lose a little bit of moment or process or profits right here, but it's a little bit safer. It's a lot safer actually to take this position right here, and you use your moving average. If it closes below that moving average, that's when you will get out, or however far you want to target on there. So this is a little bit riskier. This is nothing at all. You don't even want to try to take that trade. That trade is very, very reckless and risky because right here you can see that it didn't work. Here is your level 3. Here's all your level 2s if you want to get in there. And the reason why these are 2s from here, all these are 2s, is because it's between 3 and 1. Look at there. How about that? Because it's between 3 and 1. So here you missed the 3, but you still want to try to get in because you're moving at, or your RSI is pushing up. So these are level 2s. These are a little bit riskier, but you can see that it will be on here. Here is a pro tip on taking entries on number 2s. Always do it on a red. If you're heading up, always do it on a red because it minimizes your stop loss, because you're going to use that swing low as your stop loss, and is going to not be as risky as taking a position on a green candlestick since we're trying to go upwards. So that is why this is a 2. But the key pro tip is always do it on a red candlestick, never on a green candlestick. Doesn't matter if it's red and it's 0.1 or if it's red and 1.0. Always do it on a red candlestick because that gives you a little bit. That's just a little pullback that is potentially happening on this particular change of course right here. So here is your entry. Here's your trigger. Here's your first confirmation, second confirmation, and your golden confirmation right here. You take that position and you ride it up how far that you want, but you always want to do at least 1 to 1 on your trading, at least 1 to 1, if not a little bit higher. And you can see that 1 to 1 was 1.86% off of there. So that is how you look for entries to go short or long, I mean, when it's in the quote unquote overbought region. All right, so let's get rid of the drawings. Now we will look for a entry on here to go short on. And we want to look for a proper one. And here it is right here. We have a breakout. See here again, if you would have taken the way that most people trade, here is your short position. Hindsight, 1 candlestick, you made money off of it. But if you didn't take that profit, you're way back here inside this bad zone, because you don't know if that's going to continue to go up or if going to continue to go down. So the first thing we want to do is we want to break down below the 70, since now we're trying to go short. And so here it breaks down below the 70, and right here is going to be your level 3. You can see that this is right here. You can see that this is going to be your level 3 right here. All these candlesticks right here from this one, from this one all the way to this one. So these two candlesticks are going to be your level 2. It's going to be your level 2. And here is your true, safe, everything is pointing that we're heading down. This is the safest position that you can take on this particular trade. And again, trading is patience. You're going to be on the sidelines more than you're going to be in the charts. And that's where people also get in trouble. They think that if they're not in the trade, they're losing money. In reality, if they are in trades prematurely, they're going to lose a lot more money than letting the trade set up on its own. So here it is right here. We have a breakdown. It doesn't come back up and test it. Here is where it is. Here's our level 3 entry. If we want to take that with our swing high being our stop loss, and we want to target 1-to-1 at least, if not 1-to-1.5. Here's your level 2s right here going in here. But again, if you do go into on a level 2, you always want to do it on a green candlestick, because we're trying to go short. And again, a green candlestick at closing, by the way, let me tell you, at closing, that is going to help minimize your stop loss, but it's also going to give you a better position than the level 1, obviously. And what you do is you go in there. Here you do it at close, and you target 1-to-1. If you target 1-to-1, you can see that you hit it almost perfectly. Here's another pro tip for you. If you're going in here, here it goes down here, and you have this movement right here, and this movement is 1%, and it starts going sideways on you, it's best to exit that trade right there. Hindsight on here says that we would have hit our target, but you don't know if you're going to hit that target. So the best thing to do is either take half of it off the table or close the whole position at 1%, especially if you're leveraging. That's 10% right there. So close the whole position. If not, take off 80% of it, let 20 of it ride at the break even, or even at your swing high over here. Because even if you get stopped out at your original stop out, you're only losing 20% of your portfolio. You still have a winning trade. So take some off the table if it starts going sideways. Don't think that since we have it 1-to-1 or 1-to-1.5 that you're always going to hit it, because that's not how it happens. You always want to use money management to your advantage. And so here we can see that it happened, and therefore it would have been a good trade for us. But that is how you go short on there. So that's the second trade that we did. We did the first one heading up, second one heading down, and now we're going to I will show you how to find divergence. Divergence is key. Again, we're going to use the same rules on there. And what we want to do is we want to have a price action go up and the oscillator heading down. One of the good things about TradingView is if you have your horizontal lines and you go on there, you can click this little angle button. This tells you that from here to here is a 22-degree angle. So that means that we need this angle down here from here to here, 0 or a negative number. And we have a -2, if I did that right, -3, -4. We have a -4. So here is a regular divergence. I do not trade hidden divergences. They do not work well in cryptocurrency. I will try to find one for you and show you, but stay away from them, in my opinion, because they don't work. That price action, you want the momentum being down and people FOMOing in the opposite direction. And if that happens, you have a regular divergence, and that is going to be your entries there. Okay. Again, I'm going to move this out of the way, but you can, there it is, you can see. And again, we have a three-step risk to reward ratio. Here is going to be your 3. Here you have a divergence and you have a massive red candlestick. That is going to be your level 3 on there. And that is the next 2 candlesticks, since it's still above the moving average, those will be level 2s. And your true entry, your safe honey golden candles or golden movement is going to be right there. That is going to be your go-to every single time, and you want to use that swing high. Divergences are really safe to do one-to-one no matter what. But again, you always want to use money management. And so since our stop loss is going to be 4.64, that's exactly what we're going to trade or target for. Since we know that most divergences are a reverse change and we have a perfect setup, that means that this movement upwards that happened, this is going to indicate to us that is starting to come back down. So that we want to take advantage of that and get in early. So here is your level 3 risky. It's a little riskier. It does give you a good position, but the next 4 hours, 6 hours, you're going to be panicking. Am I going to have to stop out? Am I going to have to take this loss? You're going to start panicking because you got in too early. It's a lot better to let the trade set up before you take the trade. And here, and the risk to reward is phenomenal. You have a 4.64 risking. You're doing it 44.68 to reward. And you can see if you 10x that, you made 46% stress-free because you let the trade set up. So that is absolutely beautiful. Another thing that people will have a misnomer about is how far apart does these price action have to be. Everyone has their own rules and their own set of circumstances that must take place. I have it where I personally think that if it's within 100 bar candles, because since we're using 2 hours, so that's 200, or it's 200 2-hour candlesticks. As long as you can have that set up and all your steps set up properly, there's no reason not to take this particular trade. For example, here again, since here is our here is our price action, and we made a low, we made a -6, right? So that means from this point here to this point here, we want it to be a positive number, right? Because we're trying to have that divergence. We want to have it in a different direction. And you can see that is exactly what we have. We have a positive number. And again, it doesn't need to be, oh, so and also another thing is depending on how you do your chart will give you the angle. So the best thing to do is, if you want to show that if you do have an angle, is do a vertical line, or sorry, a horizontal line all the way across. Anything above this line is going to be a divergence for you if you have a higher low. So that's another way that you can do it, because I know TradingView will manipulate these angles for you, so you can also use a horizontal line. But again, we have our setup here. Let me get rid of those so I can clean up our chart a little bit. You can see that our price action is down. These are people. The reason why this is pushing down is because people are FOMOing in. They're selling off thinking that they're fixing to go all the way down, and people are starting to buy these shorts up. And then what happens? You have this beautiful setup divergence. You have this beautiful setup divergence for you. And now we can start marking our territory right here, right? With our 1, 2, 3. And let's go ahead and mark it so I can show you. Here is your first entry. Sorry, that's going to be a 3. Here's your 3. And it does work sometimes just like this, that you don't have a 2. It doesn't go sideways on you enough to have to. So you go from a 3 to a 1. And here is your 1 right there. This candlestick right there. And why is that our entry right there? I will tell you. We have a divergence. We broke back above the 30. We have our trigger candle, and now we broke above our 15 EMA, and that is going to be our entry, and that's going to give us a clean 1, and we will use either the swing low or the moving average as our stop loss, because that is a good habit to do. And if you did do that, let's go ahead and mark it. Here it is. And you're going to target 1 to 1. Here's a prime example. It doesn't go nowhere near your target, right? However, you're maxed out at 2%. Take your profits. Don't be that guy or that girl that says, I'm gonna ride it out. I'm up $500, but I'm gonna let it go back to zero because I'm trying to get an extra $100. Don't do that. Either close 80% of your position when you think that it's maxed out and still leave your stop loss down there, because if you have 80% closed out at close to your max position right there, and then you only have 20%, it doesn't matter if this 20% hits your stop loss, it's still a winning trade. Okay, so that is money management at its finest. Let me give you another pro tip. Here is, let me make this 50 line, let me make it yellow so it pops out a little bit. Here is your 50 line. A lot of people will buy when it crosses that 50 line or crosses below that 50 line downward, they would short it. Don't do that. Bad habits, doesn't work in crypto. Crypto's too volatile. Does it work sometimes? Yes, but you will lose 8 out of 10 times. So it's not worth it to take those gambles. And you can see right here. So those are the only three positions, only three types of positions when it breaks back down using your EMA, upwards, or using a divergence, and only a regular divergence. I know this video is a little long, but it is packed full of information. I really highly suggest you go back and re-listen to it a couple times and get it used to it. The only way that you would want to use inside there, below in this cloud, is if you have a divergence. And here is one for you. Here is a price action heading up, a regular divergence. Here is the movement moving down. So you have a divergence right here. Move it over here. You have a 13 degree and a -3 degree, and you have it going down. So since you don't have to break below the 70 because you're already there, what you just wait on is to close below the EMA. But again, we still have our level 3s, level 1, 2, and 3. Here is level 1. That is your I can't wait anymore, I got to get in the trade right now FOMO position, number 3. Oops, number 3. Here, the 1, 2, 3, 4 candlesticks are going to be all 2s. And since we're trying to go short, we want to go in on a green candlestick. So if we go on to a green candlestick, we minimize our stop losses and we maximize our position, since we want to a little bit of FOMO in, but not too much. Here is your true entry right there. That is a level 1. It is take it to the bank. This is the best, highest probability chance that you can get because it is on there. I can't stress you enough, don't go into divergence or any trade unless you have it breaking below or above the 15 moving average. If it starts going sideways on you and you have divergences, leave it alone. You want a clear divergence, clear, beautiful breakout, and you want to maximize the probability chances in your favor. I hope this video was helpful for you. If you have any questions, please leave the comments below and I'll answer them as they come in. Other than that, I will see you on the next video.